Let's talk about how to trade the U.S. inflation report. There's no question that the market is consolidating ahead of the U.S. Inflation number. And, the reason why this is so important is because this is one of the most important inputs into the Federal Reserve's decision-making process. It's growth and employment as well as inflation. Now, when it comes to inflation, high inflation is actually bad for the market. Low inflation is actually good for the market. So we take a look at what is expected for data. If we click on this tool over here, we can see that tomorrow we've got the U.S. inflation report, and this just popped down to the U.S. data. And right here it shows you that the market, I'm going to move this over a little bit so you can see it, that the market is looking for the inflation rate to accelerate on the month-to-month basis on a core. And let's see if we have the headline number. The headline number is expected to accelerate as well. So the market is actually looking for stronger CPI. If it gets the stronger CPI, that would be bad for stocks, bad for gold, and good for the US dollar, because harder inflation basically increases the chance of the Federal Reserve raising interest rates in September. It also drives up US yields and the US dollar, which drives down gold prices. If we have weaker inflation, which would reinforce the softer jobs report that we had last week, that would actually be good for stocks because it means that the Fed could hold off on raising interest rates in September, which would be a relief to everyone. It would be good for gold prices because it would drive the US dollar lower. Now, in general, I expect all of these moves to be short-lived because we still have one more inflation as well as one more non-farm payrolls report before the September meeting. So everyone wants to see how those numbers come out. But this is what you should be looking at when you're trading. Now, if we put on our levels, we know that, first of all, the Nasdaq is hovering near its month-to-date highs. And if we do get a pullback off of the U.S. inflation report, this is the line that everyone's got to watch. We kind of tested this line. Just give me a second. We've tested this over here and a few times over here. If we drop, which would be underneath here below this line, then we can see a more meaningful move lower in the Nasdaq. Putting on the moving averages, I know there's nothing really that significant because we are, near the highs on the upside. Upside resistance would be, first level resistance would be over here, and the second level will be over here. ES is similar, but ES is stretched. So if it does turn, we could drop all the way down here in ES. Now, looking at gold has rallied 13% since the over the past month. And with this 13% move, we have now tested the 200 SMA. So we're testing 200 SMA. That could pull back as well.